This week on Bloomberg Green, Fit for 55. Europe unveils its sweeping plan to cut emissions drastically over the next 10 years. But does it go far enough?
This is Europe. We still have a lot of convincing to do with member states of the European Parliament, but if we can get them to agree with us, then we can meet the goals.
From a transport overhaul to a carbon border tax, how will the EU's Green Master Plan affect different industries?
It would be very difficult, I think, to ask more of a company of our size and scale.
And the battle to become the first carbon-neutral continent. We speak to Joe Biden's climate czar about America's net zero ambitions.
Yes, it's about clean energy. Yes, it's about climate. But more importantly, it's about people.
I'm Kaylee Lines in New York, and this is Bloomberg Green. The EU is taking bold steps to become the first carbon-neutral continent. This week, it laid out its plan to cut 55% of its emissions by 2030.
Put a price on carbon and put a premium on decarbonizing. That is, in fact, what we're doing.
We will make emission trading system applicable to aviation and extend it to the maritime.
We need real incentives for change. We also need to generate the revenues to seriously invest in that change. This, in a nutshell, is why we propose applying emissions trading to transport and heating fuels.
This will allow industrial sectors involved to have the time to adapt and to provide maximum certainty.
The climate transition will be accompanied by a social climate fund.
Nothing we have presented today is going to be easy. It's going to be bloody hard. But it's also something we need to do.
The Fit for 55 plan will include an overhaul of the transport and industry sectors, a strengthened carbon market, as well as a controversial carbon border levy. Let's get to our reporter in Brussels, Maria Tadeo, for the details. Maria, what does this Fit for 55 plan actually entail?
Well, Kaylee, this is a huge monster package from the European Commission to bring down, as you say, carbon emissions by 55% come 2030. So it really is changing and will change in the next few years to come. More than 12 legislations in the European Union to update and hit that goal. So we're seeing big changes in pretty much every industry across Europe, from aviation to transportation. But we're also going to see this impact taxation, the way we price pollution. Energy efficiency, too, is going to become another big theme. And of course, you know, when you look at the plan that we're seeing right now, this is also part of a much bigger Green Deal from the European Union.
So where maybe will the pushback come from? Who is likely to be more opposed to this?
Look, I think for sure the airline industry will say that this is unfair for the car makers, too. They'll say that right now the market is still not as clean, not electric enough, and a lot of the buyers don't really have the incentive to go full green. Of course, there's also the social aspect of this, Kaylee. I'm sure you remember that in Europe over the past 10 years, we have seen a lot of support for green measures, but we've also seen a lot of backlash, especially from working class communities that feel that this is affecting their lifestyle, that this is affecting their pocket, and they don't really see the payoff. They don't really see the trade-off that comes with greener policies. So again, that's something perhaps that we should factor. One thing I would tell you, though, however, is many of the politicians and the members of the European Parliament I speak to here in Brussels, they do tell me that they've learned the lesson, and then this will have to be accompanied by measures to help protect perhaps some of those sectors.
Of course, the carbon tax in particular has become very much a hot button issue. You have bodies like the IMF saying that's a protectionist policy. But is the rest of the world going to actually have to follow Europe on that front and make polluting a little more expensive?
Yeah, and you know, Kaylee, I'm happy you bring up the carbon tax because, again, we talk about all of the green policies and these new measures, but a big aspect of it, of course, is pricing and how much do you have to pay in compensation for polluting the environment. For the European Union, they've made it clear that this carbon levy is something that's needed because otherwise what we could see is just a shift in pollution. I don't pollute in Europe, but I go pollute somewhere else. So, again, we could see those imports of high polluting industries being taxed more in the EU, but you also make a good point. This needs to be done in compliance with the WTO. It cannot spark trade tensions across the world. What the Europeans say, however, is that they will do this according to all of the international legislation and laws that need to be approved, and that if anything, everyone else in the other countries should take note of what the European Union is doing and compete in becoming ambitious, not wanting to undercut on the targets.
All right, thank you so much to our Maria Tadeo in Brussels. So from planning to implementation, let's get to the European Investment Bank. It's the lending arm of the EU and one of the largest providers of climate finance in the world. It has already committed to investing 1 trillion euros into climate-related projects by 2030. Nancy Sage is the chief climate change expert at the European Investment Bank and joins me now. So, Nancy, the EU wants to cut emissions by 55% from 1990 levels by 2030. How important is the EIB's role in making sure that goal is met?
Well, I think it's very important because we are the bank of the EU and we do our financing not only in the EU, but also all around the world in developing countries supporting the EU's development goals. So when we look at climate finance and environmental finance, and we do financing of public and private entities, everything from smallest businesses right up to large corporates, municipalities, regions. We really have a role to play in every part of the economy. And of course, when we're working in developing countries, in those developing country economies as well.
So let's talk about the actual monetary figures behind this. In 2020, about 37% of your funding went to fight climate change, about 24 billion euros, and you've committed to half of your financing dedicated to that by 2025. Do you need to invest even more than that?
I think that that's already a very ambitious target. And we have to remember that not everything that needs to be financed in the world, including in Europe, has to be focused on climate and the environment. We have many social goals, for example. We have health and education, and it's very important that we as the bank also finance those, so you can see the other 50%, if you like, being about the other goals. But all those things, including the 50% that's not focused on climate and environment, has to be compatible with the Paris Agreement goals. It has to be Paris aligned, as we call it.
Okay, so when we talk about the 50% that is going to go toward climate-related initiatives, is it more important to focus the money at climate mitigation or climate adaptation?
At the bank, I think we will continue to have more of a focus on mitigation, but indeed we are stepping up our ambition on adaptation as well as we move into our role as the EU Climate Bank. And in fact, as part of our Climate Bank roadmap, we committed to developing a new adaptation plan for our work on adaptation. It's under development now, and it's going to be launched at the COP26 in Glasgow, and that will really step up what we're doing on adaptation. Because we really need to do both. It's really important to understand that even if we would stop emitting greenhouse gases right now, the carbon dioxide in the atmosphere means that the climate's already changing. So we don't have an option. Adaptation is not some long distance into the future. We do have to do that adaptation now. But on the other hand, we also have to do the maximum we can to limit further greenhouse gases going into the atmosphere. So we have to do both, really.
And clearly the European Investment Bank is making great effort towards that end. Do you think there is enough investment coming from elsewhere, from the private sector? Is there enough impetus behind this effort aside from the European Investment Bank?
I think there's a lot happening in the private sector, but I think we all need to do more. I mean, we've set ourselves this very ambitious target, and there are other players in the market, private finance, as well as public entities, who are committing to do more. But I think the urgency with which we need to act is still not really understood by many. And we need to do more in terms of what helps solve the problem. That's the green finance, the climate finance. But we also need to be doing more about closing down, decommissioning, moving away from the industries and activities that are causing the problem. And in particular, to address the jobs and the people and the economies that are dependent on those industries, because we have to support those people and industries to move to a different type of operations or different types of activities, because some of them just are not compatible with the very urgent transition to low carbon future world.
A global effort, and the European Investment Bank clearly has a very important role to play. Thank you so much to Nancy Sage. She is Chief Climate Change Expert at the European Investment Bank. We have looked at the political and financial implications of the EU's climate plan, but what about carbon-intensive sectors? How will airlines, car manufacturers, and big oil cope with Europe's green transition? Up next, we hear from the CEOs of BP and Nissan. This is Bloomberg Green.
This is Bloomberg Green. I'm Jennifer Zabasajja in New York with your Green Brief. Californians once greeted hot summers by blasting air conditioners and packing into the pool. No longer. Battered by drought and heat waves that are straining the power grid, the Golden State is asking residents to make do with less water and electricity. It may be the new normal. Gas plants that can't capture emissions could be eliminated from Britain's power generation. The UK has pledged to cut emissions by 78% by 2035 on its way to net zero. Decarbonizing the power sector to create clean sources of electricity is key to this. The country can meet its goal, but success isn't guaranteed. Nestle is planning to enter the lab-grown meat market. CEO Mark Schneider is pressing ahead with an alternate protein strategy as environmental and health concerns drive more people to opt out of eating conventional animal products. The company is working with Israeli startup Future Meat on this project. And ECB President Christine Lagarde says that Europe's central bank is upping its green bond purchasing. Take a listen.
We will be buying more green bonds simply by virtue of the fact that there will be more green bond issuances in the future. We have been a big purchaser of green bonds ever since inception of green bonds, and we will continue being so.
Lagarde also said that a substantial majority of European banks are not yet meeting expectations on climate risks. She said that greater and better disclosures, as well as an effective carbon price, would be key elements on the continent's path to net zero. And that's your Green Brief. Kaylee?
Thanks, Jen. Now let's focus in on the sectors most likely to be affected by the EU's green transition. First up, transport. While as an industry, aviation is only responsible for 2% of global emissions, Ryanair is the only company in Europe's top 10 emitters which does not operate a coal-fired power plant. So let's take a closer look at how companies might be affected with our reporter Will Wilkes in Frankfurt. Let's talk about transport as a whole first. How should they be affected by this plan?
Well, transport's going to be quite deeply affected by these plans. The European Union is trying to cut emissions from transport, which is a sector where, unlike other sectors, actually emissions have risen since 1990, kind of since the end of the Cold War. And that's been as more people travel by car, cars get bigger, the boom in cheap aviation and flights. The idea is to put transport on a pathway to carbon neutrality by 2050.
So let's focus specifically on the aviation part of the transports. Is this going to change the way that airlines actually operate?
It will probably have far-reaching impacts on how they operate. Whether it will completely change the way aviation works, that's yet to be seen. Things like increasing taxes on kerosene will raise the cost of tickets. And you look at some of the volume players that there are in the European aviation market, like Ryanair, EasyJet to an extent, Wizz. They depend on getting people on seats. And if the costs go up, whether they can fill as many aircraft as they have is a big question.
Now, in contrast to airlines, the gas-guzzling autos industry emits a whopping 14% of global carbon emissions. That's according to the U.S. Environmental Protection Agency. We spoke to Nissan President and CEO Makoto Uchida as part of the Bloomberg Sustainable Business Summit this week. As the EU hopes to produce only zero-emissions cars by 2035, Uchida told us about the company's plans to focus on batteries to increase sustainability.
So over their lifetime, electric vehicles have a significantly similar carbon footprint than traditional cars. But for the sustainability, we must give batteries a second life. And Nissan has a clear vision for battery circular economy and had made significant progress with our rich experience of 10 years. For example, our 4R business model, reuse, resell, refabricate, and recycle the battery.
You talk about giving batteries a second life and how perhaps one way to do that, is by removing cobalt in the battery production to make it more environmentally friendly. But some say that perhaps by removing cobalt, it removes the incentive to recycle EV batteries further. Your take on that?
Yeah, I think the cobalt-less is one of the ways that we are doing, but at the end we need to aim for the solid-state battery. But moreover, what we are trying to see is we focus offering more value beyond the mobility, and our customer can draw energy out to power their home and minimize energy cost, support the adoption of the renewable energy, and balance the demand on the grid. So for example, we do have the project in Japan called Namiya project, collaborating with the town of realization of sustainable future, including post-disaster reconstruction, build mobility service as a new means of transportation, achieving of a low carbon environment by leveraging renewable energy. The more we expand EVs, the better we can realize a circular and sustainable economy.
Big oil, which supplies the fuel driving global carbon emissions, is going to be another one of the industries most affected by the transition to net zero. European majors lead the way on slashing pollutants, but the sector remains far from being Paris compliant. Bloomberg's Alex Steele caught up with the BP CEO Bernard Looney to find out how an oil titan goes green.
Few people doubt that we are doing everything that we can to transition this company. Last year, we took the very difficult decision to cut our dividend in half so that we can transition. We wrote off $20 billion worth of assets, which we felt neither should be produced or could be produced. They were written off, a very difficult decision so that we can transition. We restructured the company in the biggest restructuring in 110 years so that we can transition. And we announced a plan to cut our oil and gas production by 40% over the next decade so that we can transition. So I think it would be very difficult, to ask more of a company of our size and scale. So I think the commitment is there. I think the evidence is there. And Alex, as I look back when I spoke with you in London almost 18 months ago, just before the pandemic, look at what we have done in the new world since then. We had 0 gigawatts of offshore wind then. Today we have 3.7. We had a renewable pipeline that was 4 gigawatts. Today it's 23 gigawatts. We had 7,000 charging points. Today we have 10,000 charging points. Our net debt, by the way, at the end of that first quarter was 51 billion. Today it's 33 billion.
The EU wants to lead the charge towards a greener future, but the U.S. doesn't want to be left behind. Gina McCarthy is President Biden's climate czar, and we spoke to her about America's climate ambitions. That's coming up. This is Bloomberg Green. From Bloomberg's headquarters in New York City, I'm Kaylee Lyons, and this is Bloomberg Green. While the European Union is leading the charge when it comes to the green transition, one of Joe Biden's goals as U.S. president is to match their ambition. His climate czar and former head of the EPA, Gina McCarthy, spoke to our reporter, Jennifer DeLuey.
One of the things we decided to do not too long ago, really, only a couple of months ago, is to work with Janet Yellen and the National Economic Team here with Brian Deese and others to take a look at how we could start really working ourselves to make sure that where we had some leverage to get businesses to start accounting for their emissions, including the business of the federal government, and start reporting it in a transparent way, that it would give people a better idea of where their risk and vulnerability lies as they're choosing who to have a business relationship with. And so we issued an executive order, and we laid that out a few months ago. And it was basically to indicate that we're going to look at our own investments through the eyes of an investor to see what we should be investing in, how we're doing our purchasing and procurement here in the federal government, so that we're looking to put our resources into companies that do disclose, that look at the risk profiles that they're managing in their investment portfolios and in their businesses. And then we're working with the SEC and the FSOC and others as basically independent groups that we work with, but nevertheless feel like we could do a much better job at pushing them to routinize disclosure of climate risks, because it really makes sense from everybody's perspective, whether you're an individual consumer in your own home, or you're a large investor, or you're a large business. Getting that done in a way that's consistent and you're able to compare and contrast gives you an ability to lower your risk and invest where your values are.
What are you doing on climate now to bring in emitting industries, and not just automakers and EEI and the utilities, but also oil and gas companies?
Yeah, well, we're trying to be as creative as we can, Jennifer. There's no question that the fossil fuel companies recognize that there's a shift. I mean, I don't think they're denying that. Are they coming to the table with a full-throated response to that? No. But the president, I think one of the reasons he really, in his campaign and in his executive orders now that he is the president, is making it very clear that we have a time-limited opportunity here to make this transition. And so we have an all-of-the-above strategy. We're not taking things off the table. I just attended a meeting and did a little back and forth with Ernie Moniz, the past DOE secretary, who has the Energy Futures Initiative, and with President Trumka from the AFL-CIO, and Senator Manchin spoke at it, Senator Sherrod Brown spoke at it, because we're all looking at opportunities to actually use demonstrations of both CCUS and clean hydrogen in the Ohio River Valley, because there's an opportunity to get manufacturing humming again. We are not just going to be delivering electric vehicle charging stations. We are here to fundamentally reinvigorate the economy in a way that's going to make sense from a climate perspective, but make sense from a people perspective, really create jobs. You know, the president was thrilled with the number of jobs that was created last month. I think it was 850,000 new jobs. So he's up over 3 million jobs in a shorter period of time than any president has been able to muster. And I think if you look at the popularity of what he's proposing, it feels like people are getting the fact that we're investing in America again. We want to win the future. We want to grab back the supply chains. And we're going to do that in a way that's growing millions of jobs. It's a hugely popular proposal moving forward, like staggeringly popular. And you can understand why. You know, people are tired and they're afraid, and they need work, and they need a home to live in, and they need a shot at living in the middle class. You know, they need it. And I think this is the best way to deliver it is, yes, it's about clean energy. Yes, it's about climate. But more importantly, it's about people and making this a kitchen table issue.
That's it for this week's special edition focusing on the EU's climate plan. Keep the conversation going, though. Follow us on Twitter @Climate. I'm Kaylee Glines in New York, and this is Bloomberg Green.